Welcome to Bears in Exile. Today is May 15th, and this is part 2 of the weekend market overview. And here is the VIX. Not too much to see, except that the VIX is in a flat line sitting on the bar, which will weaken the bar and grind it down should it decide to stay here for a while. We are above the middle Bollinger Band. All kinds of room to move in either direction. Long-term moving averages are still bearish, and the secondaries are completely mixed. We do have a slight upward direction of the short-term moving averages, but this is a flat line, so definitely susceptible to falling apart here at the bar. But there just isn't much to see here in all the time frames. It's very flatline long term, flatline long term, flatline long term. So too mixed to be able to get direction or trade off of. The one good thing is that this candle does confirm the down tick in the S&P and the Dow. So that was a real down tick, and that's nice to see. If it had been some little cheesy candle like this or this right here, that definitely would have given more pause to the down tick in the S&P and the Dow. But this is a nice big candle, so no problems there. TNA, just like the S&P and the Dow, we did not get a close above this candle or below this candle. And just like the S&P and the Dow, we do have the short-term moving averages spreading out and pointing down. Whether they can get a full extension prior to entering the bar is doubtful. There just is not much room there. So being able to predict how deep into the bar this should go is difficult since we do not have complete extension. However, we can see that the long-term moving average and the short-term moving average in the 15-minute are pointed down. They're pointed down in the 30-minute. They're pointed down in the 60-minute. So with varying degrees of separation on the long-term moving averages in those time frames. So it does look like we will be going down into the bar, but we do not know how deep it will likely go. UUP. I like to watch this. It's the dollar, and I did not like, I mentioned in past videos that I did not like that we did not get full crossover prior to going into the bar, and that's a strike one to me. It is continuing on its way regardless, and it is pointed up rather steep. The secondaries are very high. They can stay that way for a long time, of course. But I still pause because of this ugly crossover we had going into the bar. And, it's going to have to pop out the other side, or at least sit in the upper range, have all of the moving averages go into it, and really do some serious damage on the long-term moving averages for me to feel comfortable about it. But I really would expect at some point very soon for the bar to offer some real resistance and have it either go sideways or tick down some. This was a very big move, very fast. I just question the entire setup here. But we can see that it does have strong bullish long-term moving averages in the 15-minute, the 30-minute, and the 60-minute, suggesting that it will continue in the upper range of the bar. So it'll be something to watch. And also FXE. FXE seems to me to be like the big brother of UUP, except it's euro instead of dollar. But since they're correlated inversely at the moment, well, probably always, but it looks a lot like it, except more extreme. Just like UUP, we did not have complete crossover prior to entering the bar, which is a strike. And however, it did bounce out the other side, and regardless of it being all wobbly and not following the rules, the last, we do have some, it would look like some extreme separation here at the end. However, the last bar, if you just cut it off right here and look at it, the short-term moving averages do look very uniform, even though they have very wide separation. So it does have that in its favor. The secondaries, just like UUP, are at extremes, and of course, because with the move you have the long-term moving averages strong in every time frame, suggesting that it will at least hold its current level for a time, if not go farther. So, but I still think that this is a heck of a move in a very short period of time, and this does look bubbly to me, and could have a an upward move to correct it. In this case, if we had an uptick tomorrow, that target would be just above 143, and then it would be totally clear by the rules to continue down. But until we have an uptick, we do not have a clear signal. And the bullish long-term moving averages at some point should try and suck it back in, provided it doesn't just drop farther and it just compresses and flips over in a 2-day time period, which is not typical but can happen. So I would look for an uptick here, as well as a possible downtick on UUP. I would also think that the Dow could get an uptick as well, but that is just conjecture on my part, and being that the signals are all mixed, and we really need a candle on the Dow and the S&P to go above the 2 candles that they were looking out for. Oh, there was one other thing. I should have mentioned this earlier, and I forgot. On the Dow, this big red candle, the green candle from the previous day, and you look at this and you say, oh, bearish engulfing, right? Wrong. Not by the letter of the law, because this green candle here, it closed at 1265.92, 695.92. This one opened 695.65. So we have a third of 1 point difference with this green being higher. So, if you're a stickler by the letter of the law, this did not completely engulf this candle. Is it close enough? That's pretty as close as you can get, but it does not do it perfectly. So if you saw this and you said, oh, bearish engulfing, it's not. So too bad for us. Not that bearish engulfing is the end all be all, that's for sure. Well, there you have it. There is the weekend market overview, the big the most interesting one being the S&P, and we'll be watching that one very, very closely. And as always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only.